All right, here with Mark Siebert at iFranchise, one of the leading franchise consultants in the entire country, if not the leading franchise consultant. So it's a big privilege that we have today to have Mark with us. And Mark, I'm going to let you introduce yourself. And while you introduce yourself, I'm going to let you grab the screen so that you can share your slides with everyone.
Well, thanks. So, my name is Mark Siebert, and I am the CEO of a company called the iFranchise Group. And the iFranchise Group, for those of you who have not heard of us before, we are a management consulting firm that specializes in working with both new and established franchisors. So we do a lot of different things for our franchise clientele, but some of the things that we do include development of strategic plans, development of marketing materials, development of quality control documents, and assistance with implementation of the franchise program. A little bit about us. I guess the most recent news is that we have recently been named for the second year out of 2 years possible as the best franchise consulting firm in North America by Entrepreneur Magazine. And they gave us that designation based on a survey of 700 plus franchise systems in North America, where they asked them who is the best franchise consultant, and they came back with us. So we've been around for about 20 plus years. We have offices in North America and in the Middle East. We have 27 consultants on staff with over 700 years of experience in franchising. We typically, our profile of a prospective franchise consultant is somebody who has been there and done it. So we don't hire people straight out of school. Our people are typically people who have been executives with franchise organizations. And in fact, our people have worked at 59 different franchise organizations over the course of their careers and have run in some kind of senior role about 30 of those organizations. So we've got a lot of different experience from a lot of different kinds of companies. So that's, I guess, a little bit about us. We are, I think, the biggest in the industry, which allows us to do things a little bit more quickly than others. We've worked in a lot of different countries and both domestically and internationally on the franchise side. We do have a related entity called Top Farm Media, which is a company that does franchise PR, franchise SEO, franchise lead generation for their clients. They help primarily to generate leads for franchisors, but they will do some projects in terms of consumer-facing websites and consumer-facing SEO as well. And they have won, again, numerous different awards for their efforts over the course of the years. And so I've put up just a quick little piece here that says a little bit more about what it is that we do, both for startups and for established franchisors. For startups, it usually starts with helping companies to figure out where they should be at from the standpoint of their business structure. So what should their fees be? What should their royalties be? Who do they need to hire? When do they need to hire them? What organizational gaps do they have? The development of operations manuals and training programs, training videos, online learning systems, the development of marketing and marketing tools to help companies to better market and sell franchises. We help with training companies on how to sell franchises, how to implement franchise systems, and act as an ongoing coach and mentor to a lot of our clients. For established franchisors, it's the same basic skill sets, but applied a little bit differently to people who have made a little bit more progress with their programs. So oftentimes with a established franchisor, it might be organizational analysis or restructuring of the franchise organization. While it's oftentimes things like updating operations manuals, it could be just a review of those manuals. We actually do franchise reviews for some of our clients and for anybody here who's listening today, happy to do a review of your operations manual at no charge, just to see if there are things that you might be missing, and if so, we can give you an idea of what those things are. It's a pretty detailed review, and happy to do that given our relationship with Christian and his group. We also do help companies that are struggling with their franchise marketing, their franchise sales, to understand what's going wrong. Why are companies not selling to the extent that they could be selling? What could they be doing differently from that perspective? We provide, as I said before, through Top Fire Media, ongoing lead generation through and public relations services, and we'll also do some things in addition to train people on the sales side. We do some acquisition due diligence, some expert witness work, and some other miscellaneous kind of projects as part of what we're doing in the process as well. So that's a little bit about us. And I don't know if you have some questions, but just I would start by telling your users that we're also happy to send along a free copy of our book to anybody who'd be interested in, called Franchise Your Business. It's geared toward both franchise companies and companies that are thinking about franchising. And so if anybody be interested, just if they can just say where they heard about it, and be happy to send it along with our compliments. So with that, I'm open to your questions.
Okay. Well, thank you very much, Mark. And I've read your book, and I've given it out many times, and those that I've given it out to are very appreciative, and they say it's filled with great information. So I'm going to steal back the host here so that we can, and if you'll jump, okay, perfect. All right. So the questions that I have, we handle the legal side, but we can't really help, or at least we're not experienced in helping people with the operations side of the franchise system. And that's kind of what, that's what you guys do, in addition to those other things that you just mentioned. But so what are the most common problems? Let's start with existing franchisors, those that are looking, or that are already franchising, and they come to you. What are the most common problems that you see?
Well, I think the most common problem that we hear about is franchise marketing and franchise sales. They're not getting enough leads. The cost of the leads are too high. The close rates on those leads are not where they want them to be. They're not closing as many as they'd like to close. I'm not sure that's the most common problem. I think that a lot of franchisors probably don't spend the time on their operations manuals and their quality control, but because it does not necessarily drive short-term revenue, it doesn't necessarily get as much attention from our perspective. But I think the most common thing that I hear about, anyhow, is people that are having difficulties in marketing and sales.
Okay. And is that where you would point them to your sister company, Top Fire Media? Or do you guys do that in iFranchise as well?
No, not necessarily. Not necessarily. Yeah, so the process of franchise marketing and franchise sales, and there's a paradigm that we use in the book that talks about sort of that franchise sales process. It can break down in a number of different places. It can break down in the area of franchise concept. So are there concept related issues? It can be the franchise marketing and what the messaging is or the media is. It can be based on the franchise sales process. So what we typically do with our franchisor clients that express this as a problem, we start by doing a review of what their current key performance indicators are, ask them questions about how they're doing from the standpoint of various different media, and try to make sure that we have a good understanding of where it is broken. Now, oftentimes it's more than one place. It's not just the leads. It's usually some combination of leads, messaging, targeting, potentially concept, potentially validation, potentially franchise sales process. where a lot of the little things need to be tweaked. And sometimes as part of those tweaks, we might refer them over to Top Bar Media to help them with lead generation. But it's not that simple of a solution. There's about 24 different characteristics in the franchise sales process, major categories in the sales process that we look at to try and make a determination as to whether or not a certain aspect of the sales and marketing process is causing this. And I would say if I were to look at a series of audits over the years, I'd say that most franchisors that go through this process, we find something that can be tweaked. It's not necessarily broken, but something can be tweaked in more than half of those 24 different characteristics.
Interesting. Yeah, that is a good point. No, that's great. And so, do you have any success stories that people that you worked with that came in with kind of like a broken sales system, and that you guys were able to assist them and turn them around?
I've got better than that. I've got a success story of somebody who had what they thought was a success, helped them turn it around. It happens to be a Utah-based company, or at least it was a Utah-based company called ChemDry.
Oh, yeah.
And when we went to ChemDry originally, they said, we'd like to sell franchises more quickly. We'd like to sell them a little bit more aggressively than we are, but we're doing pretty good right now. The year before I had come to them, they had sold 80 franchises. So it's not like they were pikers or something. It's not like they weren't doing a good job. But what we did is we went through our audit process. We looked at the various different things that they were doing wrong, and we ended up putting together a PowerPoint deck of ways they could improve. And again, this is mostly tweaks. This was not major overhaul kinds of things. But I gave them about a 50-page PowerPoint deck of things that we thought they should be doing differently. They implemented that deck. When they did implement the deck, they basically did not increase their advertising budget. Left their advertising budget right where it was, and they went from 80 franchises in the first year to 200 franchise sales the year after that. And they attributed that to us. They've actually, if you go to our website, which is iFranchiseGroup.com, there's a part there where it talks about testimonials, and the former president over at ChemDry talks about that exact story. And there's other stories like that as well. We did a project for Honey Baked Ham, where they said we can't sell at these smaller secondary and tertiary markets. And that was their particular problem. And they've done testimonial videos for us as well. But we've got a lot of different stories like that, where we go in, we take a look at something. In both of those cases, we did not make referrals to Top Bar Media. It was really just mostly systemic kind of issues. But there are other instances where that might not be the case.
Okay, no, that's great. Thank you for sharing that.
Sure.
So, in terms of, and I saw on your list, of things that you provide, something that we often get is saying, they ask us, do we draft operations manuals? And we say no. And then I saw on there that you said, video tutorials. It seems like the trend, at least with the new franchise systems that are coming to us, is that they want to create videos instead of just a binder or something like that. And so I saw that that's what you guys provide video tutorials and things like that.
Mm-hmm. We're still of the opinion that a good franchisor is going to put together a solid operations manual, and that's really the first step. And as you know better than probably anybody, the importance of that operations manual is that it's going to be connected to the franchise contract and is therefore legally binding, and you can enforce the provisions of that contract through your franchise or through your operations manual, and control quality in that manner. So the operations manual is still going to lay out in concrete where the brand values and the brand standards are. The videos are more useful, in our opinion, for repetitive tasks that are being done, especially by people on a team that have high levels of turnover. So if you have a restaurant franchise, the cooks in the back, or the waitress in the front, waiter in the front, those types of people typically have higher turnover rates. Oftentimes we find 185, 200% turnover rate in some of the back of the house functions in restaurant operations, although that's likely to change in these pandemic times. But when you see those kinds of turnover, the issue is it's like that game Chinese whispers, where you tell a secret to somebody and then they pass to the next person, they pass to the next, and it goes around in a big circle. And then when everybody whispers it back, when they finally get to the beginning again and the person restates whatever that story was, it sounds completely different.
Right.
If you've got a high level of turnover with your hourly employees, and they are being trained by somebody who trained by somebody who trained by somebody who trained by somebody who trained with the franchisor, pretty soon that training gets distorted. And that's where video comes in and comes very handy, is they can get firsthand training that's very consistent for some of these hourly employees that have repetitive jobs that have to be done over and over again, so that they are trained by, essentially being trained by someone who is really responsible for brand standards, as opposed to being trained by somebody who is sort of passing this knowledge on and may distort it in the process. So especially for those kinds of jobs, we really recommend video and the online learning systems that accompany it.
Okay, great. All right, I want to switch gears just a little bit with our time remaining and talk about, because some of the people watching this video are currently franchisors that want to
Sure.
improve their operations, sell more franchises, and you touched on that, some success stories and things that you guys do. But I want to talk to those people that are watching this who are not currently franchising or thinking about it and thinking, well, what does it take to franchise? Am I a good candidate to franchise? How do you do it? How do you start? And I know you work with startup franchise systems as well. So,
Sure do.
so what when people from what I understand, there's you get a lot of inquiries of businesses wanting to franchise, and there's a very few of those that actually end up franchising because some of them just aren't ready. So what is a good what type of business do you think is a good candidate to start franchising?
I'm not sure that it's any particular type of business, but whatever the business model is going to need several sort of things that are going to be different from just a company-owned expansion program. So we really look for three things in businesses that want to franchise. The first thing we're looking for saleability of the concept. Now, there's some statistics out there that says an average new franchisor sells 9 in the first year, 11 in the second year, 13 in the third year, and median number is 4, 5, and 6. Here's 1, 2, and 3. But what we really want to find out is this particular franchise something that's saleable? And so we look at things like, how long has the concept been in existence? But necessarily, one of our clients, Massage Envy, was only in existence for 3 months when they started franchising. It's not, none of these things are make or break, but when we look for things like how long have been in existence, how much credibility does the ownership and the ownership team have, the management team have, how much credibility does the concept have, how well is the concept running, are multiple units in existence? Again, Massage Envy had 1 unit when they started franchising, so it's not, none of these are sort of carved in stone. We want to ask ourselves first the question, can we sell franchises? Is this something that has some sizzle factor to it? Is it something that, if it doesn't have sizzle, can we differentiate it adequately in the marketplace so that it will have something that will appeal to people? What is the value proposition? So that's the first piece. The second thing we look at is the ability to replicate the results of that first location or the first handful of locations that are company owned. So when we look at sort of that, we're looking at, is it a teachable business model? Is it working because a business owner is putting in 20 hours a day, every day of the week? That's probably not going to be something that's replicable. Is it working because it's in a particular location? So some food service concepts, for example, there's a food service concept that came to us out of Canada that served what they called barbecue chicken, which I'm sure the people in Canada loved it, but when we tried it, it was just really not what people in America think of as barbecue. Some concepts just don't translate as well. Barbecue concepts, as an example, often tend to be somewhat regional. certain things like Cincinnati style chili is another example of with companies like Gold Star and Skyline, where they've managed to franchise, and they've done so in a limited number of markets, largely because what they think of as chili is very different than what somebody in Texas might think of as chili. So we look at, is it transferable? Is it something that is readily teachable? Can somebody learn it in a short period of time? So McDonald's has a 1-year training program, but most of us aren't McDonald's. And so we need to be able to teach somebody in maybe 3 months or less how to run this business and run it well enough to maintain our brand standards. And is it something that will work in a variety of markets? Then really the acid test, the most important piece of franchisability is the financial piece, sort of the return on investment, if you will. So what we try to do on that part is take a look at how much does it cost a prospect to get into this business. And after making all the adjustments for adding in a franchise fee, adding in a royalty, subtracting out non-franchise related costs that maybe you're, including your country club dues as part of your expense line items, or your corporate Mercedes, or whatever it is, but adjusting things for what a franchisee would look like if they ran it as a very straight and narrow down the middle business, adding in a royalty, subtracting, adding a franchise fee to the initial investment, and then look at it from the standpoint of what would that profit look like after making all those adjustments? What is the investment? And then dividing the profitability by the investment amount to get a return on investment number. So we're not looking at it from the standpoint of return on sales. We look at it from the standpoint of return on investment. So the theory here is that if I were to choose not to franchise, I could go out and get a job, and so I would get paid for that job, and that would be part of my compensation. And I would also be able to take my money and invest it in the stock market or the bond market and get a predictable return. So with franchising, we want to see at least a 15% return for an individual owner-operator, or a 20% return for a multi-unit operator. And that is after paying all the salaries at the unit level, including the franchisee salary if they're going to be an owner-operator, at a market rate, and after deducting the royalties. And if we can get those kinds of returns, then the franchisees will be able to make enough money so they will feel that they've gotten good value for their franchise investment. So those are the three things we look at: is really saleability, the ability to duplicate something, and the return on investment for the franchisee.
So that's, I want to stick for just a minute on the return of investment, because I think it's a really great way to look at it. In terms of the ROI, what is how many years? Because there's that initial investment. Item 7 talks about, okay, you got to spend $200,000 to $400,000 to get this thing going. What do you say a franchisee needs to be able to make that money, initial investment, back within X number of years? Is there a certain number of years that you look at?
Well, that's, if you're looking at it in terms of payback period, the minimum number for an area developer is going to be 5 years, and for an individual owner operator, it might be a little bit more than that. But that is sort of the minimal level that we look for. But yes, so 5 years or so would be the minimum level at providing a 20% return on investment.
Okay, yeah, I get what you're saying. Okay. No, that's great. Those are really great things to look at. And I liked your example of the Cincinnati chili, where a concept in one region may not translate well into another region.
Yeah. And going back to that return on investment number, one of the things that's important to maybe point out to your listeners is that with the franchise contract, the vast majority of franchise contracts would allow the franchisee to resell their franchise at the end of this. So if you're making a 20% return on your investment, you've made a 20% return for 5 years. But if you're still making that 20% return, remember, you can resell your franchise, and you're probably going to get more for it than you would have if you had sold it. If you got a 10 times multiple on a 20% return, you've already doubled your money when you sold your franchise. So you do get the opportunity to cash back out of this if you have the a franchise agreement that allows you to resell your franchise.
Right. Okay. And then, so I've listened to you talk on this subject a little bit, and based on our time, this may be the last question. But with franchise systems that are brand new, startup franchise systems, and they're establishing their initial franchise fee, the royalty, and other fees like that. How do you advise? How do you come up with that? And obviously, we only have a few minutes to talk about it, and there's probably a lot that goes into it. So how do you advise people how to come up with that initial franchise fee? And let's just do initial franchise fee and the royalty.
Okay. Well, you're right. My usual advice is to hire somebody like me, but they're not going to hire me. The way that I tell them is that there's multiple different ways to do this kind of an exercise. The first thing you do, you want to sort of set a floor, and the floor should be for your franchise fee. I'm just talking about franchise fee first because it's a little bit simpler. You set the floor based on what is it going to cost me to sell that franchise. So you look at what are my marketing costs, what are my sales commissions, what are my training costs, and look at all your out-of-pocket expenses for that, and that gives you sort of a hard floor. Then above that, you can add in and do maybe what I call a soft floor, which is something where you add in your overhead. You'd add in that overhead allocation on top of that allows you to say, I'd like to be above the soft floor. I don't have to be. Then you try and set a ceiling, and that's usually the ceiling is sometimes is going to be based on what is a competitive market look like. So what are the franchise fees being charged by your competitors? Now, again, you can go above or below those fees. So for example, Encyclopedia Britannica, when they did a project with us many years ago, they wanted to make sure that they were the premium brand in the market. They said, we want to be $10,000 above anybody else who's out there. And on the other hand, Subway, when they started franchising, their franchise fee was $8,000 with a second franchise available for $1,000. So they were sort of buying market share by selling them very inexpensively, probably weren't even covering their costs for a lot of that period of time. So you can go below your floor, you can go above your ceiling. Those kinds of things are possible, but this gives you sort of that relevant range that you normally want to be in. Once you've done that, what you're going to want to do is you're going to want to do some financial modeling to determine where in that you're going to be. Part of it is a positioning exercise, as just discussed with Encyclopedia Britannica and what their thoughts were. And the other part is a financial model where you develop sort of a return on investment model where you simultaneously model both the franchisee and the franchisor to determine returns on investment and relative risk for both parties to try and make sure that you're providing an adequate return to both the franchisee and the franchisor based on the risk of a particular system. That's how you do the franchise fee. You sort of set that fee usually somewhere in that relevant range. That's sort of the first step. When you're doing a franchise royalty, it's the same basic principle, but because it's an ongoing payment and there are ongoing expenses, you have to develop a more sophisticated financial model that's going to model both the franchisee and the franchisor at the same time. And then as part of that financial modeling, what you're going to want to do is what we call sensitivity analysis, where you take a look at the various different fees that various different factors that could influence return on investment. So, for example, what happens if the average unit volume of your franchisees is 20% below what your average unit volume is? What happens if it's 20% above? What happens if one of your key supply ingredients is, your cost of goods sold, whether that's a food cost or a regular cost of goods sold for a retail operation or a component of some service organization? What happens if there's a price increase and suddenly your cost of goods sold goes up? What happens if you're going into a market with labor restrictions and labor laws that require a $15 minimum wage? And so we do various different iterations of that same analysis. So once you've built that basic model, which is for us about a 17-page model, financial model, then you go through and you start altering the assumptions and look at it through probably a dozen different lenses. So you can say, what does it look like in each one of those scenarios? What are the likelihoods of those scenarios? And then you narrow down your range based on that sensitivity analysis and try and get to a number that you feel is going to work in the vast majority of situations to provide that win-win for both the franchisee and the franchisor.
Wow. Wow. Well, that's great. I mean, it's just cool to listen to you talk. Obviously you have
Thanks.
vast experience and cool examples, and you know your stuff. And I would just encourage all listening to this to reach out to Mark and iFranchise Group. At the very least, get yourself a book, read it. It's great. It's got a lot of great information, and it's written for business owners. It's not like a boring legal document or anything like that. It's an easy read. It's good. Got a lot of great information, and just really appreciate Mark for his time today. He's a busy man. Their group represents a lot of franchise systems, both nationally and internationally, and so it's a great privilege to have him with us today. So thank you, Mark. Appreciate your time, and look forward to continue working with you in the future.
Thanks so much for having me, Christian. I really appreciate it. Nice talking to you.
You as well.